India's top SUV and tractor maker Mahindra Mahindra has reported a sharp decline in its Q1 profit, which is a steeper fall than the street estimates as well. Let's do a three-point analysis of the earnings fine print and the outlook going forward as well. 1. Key highlights of the Q1 earnings. Well, Mahindra Mahindra has registered a massive 97% year-on-year decline in profit for the June quarter as lockdown has hit volumes. Profit, including Mahindra Vehicle Manufacturers, which is a 100% subsidiary of the company as well, stood at 67.8 crore rupees as against 2,259 crore rupees in the same period last year. Now, the profit before exceptional gain of 29 crore rupees declined 96% year-on-year to 39 crore rupees for the quarter. Revenue from the operations also fell 56% year-on-year to 5,589 crores in Q1. Now, as vehicle sales declined 78% to only about 27,500 vehicles this time. Negative operating leverage dented the operating income. Consolidated EBITDA came in at 573 crore rupees, down 68% year-on-year. The operating profit margin contracted to 10.2% for the quarter, down 380 basis points when you compare it with 14% reported in the year-ago period. 2. Better rural demand saved the day. Well, the quarter has been a washout for the company, and that's due to the COVID-19 pandemic, which led to lockdowns and also shutdown of various businesses. Now, in fact, 1/3 of the quarter went into the lockdown and demand started picking up only in the month of June. Now, both the auto as well as the tractor segments were under tremendous pressure this time. The auto volumes were down 77%, while tractor volumes were down 24%, even though better than the auto segment. The company's key brands, which have strong rural buyers, also saw good demand from June onwards. Now, however, the low pipeline inventory coupled with the challenges of ramping up production due to the supply chain issues which still affect the company's sales is something to watch out for. The tiny relaxation of the lockdown for the agricultural sector along with positive rural sentiment definitely led to some good sales numbers for tractors during the quarter despite the supply chain issues, which has partly offset the pain this time. 3. Does the stock have more steam post a sharp run-up? Well, the company is hopeful with respect to the rural demand due to the government schemes as well as the good monsoon that will definitely increase the money in the hands of the rural population. Now, company's managing director Pawan Goenka has commented on the earnings saying that the quarter has been better than expected given the kind of circumstances that we are in. However, the company believes that a combination of lower income, heightened uncertainty is definitely going to drag consumer spending in the whole year FY21. Now, Rajit Rajoria, equity research associate at Angel Broking, has said that the tractor demand is still likely to remain buoyant even in the coming quarters. Now, even though the stock has already rallied quite a bit, say almost 125% since the March lows, the valuation is not very expensive when you compare it to the peers. It is trading at 12.5 times the FY22 expected earnings. However, the stock right now seems to have priced in the recovery in the tractor segment with the pickup in the rural demand for now. So, immediate run-up is definitely not there on the cards.